We're half an hour away from the Opens in Hong Kong, Shenzhen, and Shanghai. You're watching The China Show. I'm Yvonne Man with Annabelle Jewelers.
Our top stories: oil prices are stabilizing as Iran, Israel, they honor President Trump's ceasefire. Cautious trading in Asia following the Nasdaq's record close, driven by Fed Chair Jay Powell's balanced comments on rate cuts.
Trump, meanwhile, surprising traders and his own officials by giving China the green light to keep buying crude from Iran, appearing to undermine U.S. sanctions.
And I'm Sherry Yan in the World Economic Forum here in Tianjin, China. Premier Li Qiang speaking and taking the stage in the next hour. We'll also be speaking to a great lineup of guests on everything from China's AI sector, the economy, and the impact of the tensions in the Middle East.
And it remains our top story here this morning, Val. It really is this ceasefire, which some have called quite shaky right now between Iran as well as in Israel. Both sides have honored what President Trump has talked about, this proposal for that 12-day ceasefire. But is it really just a pause in the conflict, or is it what Trump is talking about, a foreign policy success?
Yeah, I mean, there were definitely some early breaches, and we saw President Trump coming out on social media to really warn against that happening. But I think you also need to consider the extent of the damage, and this is where it's also becoming really unclear. Yes, you've got that ceasefire holding, but really what was the impact of the US joining this? Because again, we're getting some really mixed commentary from this. You've had the IAEA, for instance, going on Fox News to say that this is something that's going to have pushed back Iran's nuclear goals or nuclear weapons goals by at least a significant amount of time, but months, years. You've got CNN and the New York Times, they're reporting on classified findings. They're saying a bit of a different story, a much shorter window. So again, just a lot of clarity, or lack of clarity rather, as we again get around 20 hours so far into the ceasefire?
Yeah, so the markets at least are taking it as a go, right? And they're saying, right now we're going to believe and at least stick to this Mideast truce. But then again, you have to talk about the Fed as well. That seems to be supporting a lot of these risk assets here this morning, and what really Powell said in his testimony too.
Yeah, I think we got it right in the headlines there. It was sort of that balanced commentary that we got around the outlook for Fed rate cuts. Again, it's something that we've heard many times before, but just really cautioning the need for more patience to see exactly, are these tariffs going to end up being inflationary? But he has really seemed to open the door a little bit to an earlier rate cut, perhaps.
Yeah.
And you saw that reflected in the trading moves as well, because we saw those moves in Treasury yields, for instance, retreating, and that was a big bounce, really, for the Nasdaq in particular.
Yeah, and I think it wasn't so much Powell's comments, right? It was what we heard from Chris Waller. It was what we heard from Michelle Bowman before that testimony, where both of those Fed officials did signal maybe they would appear open to a July cut. And that really got the market really quite excited, though. But you're checking markets right now, though.
Yeah, that's right. I mean, again, you kind of see those sort of two factors coming in. You've got that sort of relief, at least this truce does be starting to take hold in the Middle East. And you've got this outlook for Fed rate cuts perhaps being moved a little bit more forward. So overnight, a pretty strong session on Wall Street. We saw gains for the S&P 500, for instance, the Nasdaq hitting the first record that we've seen going back to February of this year. It's a little bit more muted in the session, but still you're in positive territory. Watching oil prices as well pretty closely, because we have seen oil snapping a two-day significant drop, double-digit percentage drop today. The surprise move there, and we can get more into the details on this, is that Trump is giving China the green light to continue purchasing Iranian crude. But again, we don't really know the details of exactly how that's going to function, because it's undermining years of U.S. sanctions on Tehran. Golden Dragon Index, again, a big beneficiary out of this tech bounce that we saw overnight, closing around more than 3% to the upside. And also taking a look at what we're going to see for China's going into the session today, because of course, we've got the World Economic Forum going underway in Tianjin right now, and Premier Li Qiang, for instance, speaking at the top of the next hour.
Yeah, that could be our top story. But what we are expected to hear from him, right? When you talk about the theme of WEF this year, it's entrepreneurship for a new era. So we'll see what that all entails. Let's talk a little bit more about the Middle East. And earlier, as we mentioned, President Trump expressing frustration with both sides, using language we haven't quite heard him publicly before.
I'm really unhappy if Israel's going out this morning, because the one rocket that didn't land, that was shot, perhaps by mistake, that didn't land. I'm not happy about that. You know what? We basically have two countries that have been fighting so long and so hard that they don't know what the they're doing. Do you understand that?
All right, let's bring our senior editor, Bill Ferry, as he joins us now with the latest. Bill, obviously, the frustration from the president. Where do we stand now on this truce?
Well, it does sound like, it does look like this truce is holding for now. It was a very shaky start in the beginning, and the timetable was really not clear about when each side was expected to stand down. What we ended up seeing was both sides basically keeping up the fight to some degree right up to those deadlines, and in some cases a little bit past. And that's the frustration you saw President Trump referring to there. But it does seem to be holding, and there are now next questions coming in terms of will the IAEA be able to get back in and try to determine the fate of some of that highly enriched uranium, which we don't currently know the whereabouts of. Will there be a more conclusive assessment of how much damage was done to some of those nuclear sites, including that key site at Fordo, where these high technology centrifuges really were used to create to enrich the uranium? Those are the big questions out there. As you alluded to earlier, the Defense Intelligence Agency, in its preliminary report, has said that it's quite possible that the underground facilities were not entirely destroyed. And so the big question is, has this set Iran's nuclear program back by months or by more than a year?
Yeah, exactly. And that's what I want to ask about, Bill, because if you speak with military bomb experts, for instance, they say that you would have needed, if not days, weeks of sustained attacks on these facilities to actually manage to wipe out their enriched uranium stockpiles. What's the point of the US joining this then? Is it more an act of compellence where you're using actual force to try and force Iran to change their behavior?
Well, certainly that's part of it. I mean, I do think the U.S. got involved because it believed it had the best chance at destroying those nuclear facilities underground. No one else has the type of armaments, short of nuclear weapons, that would be really required to do that damage. There's a lot of questions about how much intelligence the U.S. and anyone had about how deeply buried some of those facilities were. That, of course, will affect the effectiveness of those bombs. But there is this renewed effort now to see, okay, we've gotten past this conflict. Both sides, Israel and Iran, have stopped firing at each other. The U.S. says it wants to go right back into talks with Iran, see if they can reach an agreement to not have them restart a nuclear program of any kind. We'll see what the Iranian response to that is. I imagine it might be some time before we see that taking place.
Bill, I'd like to get your take on what we heard from the president announcing on social media that China can continue to purchase Iranian oil, which did shock a lot of oil traders out there. Why the sudden U-turn, you think?
Yeah, well, it's interesting because China never stopped buying Iranian oil, right? They have been Iran's biggest consumer. China does not recognize U.S. sanctions on Iran's oil exports at all. So they have used a dark fleet of ships. They have continued to import throughout this process. The big question is, does this signal that Donald Trump is going to push for an end to the sanctions? He cannot unilaterally get rid of those sanctions. We're hearing from the Treasury Department and others that for the time being, they are continuing, they will continue to enforce those sanctions. Enforcement hasn't been particularly strong because we can track a lot of these ships. We can see where they're going. We can see them leaving Iran and arriving in China. But it does perhaps lower the tensions and questions about whether those ships will continue.
That was our Bloomberg senior editor, Bill Ferry, joining us this morning from Singapore. And speaking of oil, we'll stick with that conversation and bring out our MLive strategist, Mark Cranfield, also joining us from Singapore this morning. And Mark, I mean, it's probably no surprise that we're seeing a bit of relief coming through into oil prices this morning. But how long do you think it is before traders sort of shift their focus back to bigger macro questions as well, like the tariff talks, the economic picture, the picture for the Fed as well, other factors, OPEC Plus, for instance, which probably goes for the rest of markets as well?
Yeah, I think that's already starting to happen. You can see Treasury yields came down quite nicely when Jerome Powell was speaking last night. What's happened with oil prices is a very constructive lesson across asset classes. And it shows you just how difficult it is to trade geopolitics and make money out of it at the same time. That's the real issue. There's a saying in the trading market that your profit and loss account doesn't lie. But if you look at what's happened with oil, was the outstanding asset that reacted once Israel started attacking Iran. If you look at all the big asset moves over that period until this ceasefire began, oil was obviously the one that was the most dislocated. Even up to 1 week after the first strikes, it was more than 10% above its earlier levels, whereas the dollar was fairly contained, bond moves were fairly contained, and equities were only down by a very small amount. So there was a lot resting, a lot of money had been invested on oil prices staying high. Look what's happened this week. Within the space of 24 hours, oil prices collapsed. You've wiped out all of those people who took leverage bullish possessions on oil over the preceding couple of weeks, have actually been decimated within the space of 24 hours. That's a very painful hit to people's P&L. And it tells you just how difficult it is to sustain a position trading on the basis of geopolitics when other parts of the market are telling you it's not worth doing it. That is going to make people very, very reluctant to bet heavily on what happens now in the of course, they'll be looking at the Middle East. They'll be taking notice of all the movements there. But for people to take aggressive exposure because of what they see in the Middle East is going to be much more difficult now that everyone's lost plenty of money in the oil market over the past couple of days. So they're going to go on to where can they start to recoup their losses in other areas, in trading the US dollar, equities, bonds. Those paths look a lot clearer, particularly after Jerome Powell said there are many paths of interest rate policy, which people are taking as a hint that the July Fed meeting is now very live.
Yeah, Mark, I want to get more on Jay Powell and what he said, right? The wait and see approach that the Fed is looking at right now. Let's take a listen.
The effects of tariffs will depend, among other things, on their ultimate level. For the time being, we are well positioned to wait to learn more about the likely course of the economy before considering any adjustments to our policy stance.
So it seems like July is live, as you mentioned, Mark. It seems like you take a look at what options are betting on is that this U.S. 10-year yield is actually going to head back to 4%. How likely is that scenario, do you think?
It's not that far. I mean, we'd only have to move, about 30 basis points or so. That's not really a big deal in the scheme of the kind of movements we've seen over the past couple of years in the bond market. It probably would mean if people get serious about a July rate cut, you're probably going to see curves steepening. It's probably more effective in the 2-5-year sector of the curve than it will in the 10-year. But those yields will probably come down as people start to price for the Fed to do something. What you have, traders are watching this split. Obviously, there are some Fed members, such as Mr. Waller, who become very dovish, and they're already calling for the July meeting. There'll be more speeches over the last couple of weeks, and you can expect more people to start to lean that way because that's what's playing well in the market space. So they're going to lean into that. Mr. Powell is going to find himself becoming a bit isolated. If he tries to steer a neutral path, he'll be finding himself pretty much out on his own after a while, in which case the consensus will naturally move towards the idea, why don't we go with a 25 basis points rate cut? Since the market is giving us the window to do it, by the time they get to July, it may well be fully priced in, and then the Fed just has to walk over the line. Over the next couple of weeks, you can expect that pressure to continue to build. That will mean the US dollar will be more on the downside. Yields will gradually be coming down, and obviously be pretty positive for the US stock market as well. Assuming there's no major dislocation in the Middle East in terms of oil prices, particularly oil the flows being restricted, such as the Strait of Hormuz being closed, if that doesn't happen, we're probably going to be on a relatively good path between now and the Fed meeting, people generally optimistic on what to expect.
Mark, just as we've been speaking, we've seen the offshore yuan strengthening to the highest level since November against the greenback. What's your prediction of where we go from here?
China have been very clear. We heard specifically last week from the PBOC that a strong, stable currency is very much a part of their general game plan for inviting people back into Chinese securities, getting more money to come into onshore markets. There is no deviation in that plan whatsoever. What's helping China in their cause is the fact that the major currencies, particularly the euro, is looking pretty healthy. When the euro is good, the flip side of that is US dollar weakness. That plays into a stronger yuan. The game for the Chinese central bank appears to be let the yuan appreciate, but not as quickly as other Asian currencies. Hold it back slightly from the Korean won and other markets where they compete in the export world, but still let the yuan appreciate to some extent. There's no reason for them not to continue with that path, particularly when they're fairly sure that the Federal Reserve is going to continue to lower interest rates. The PBOC can hold rates where they are. That allows a bit more strength into the yuan. It's not going to be a fast pace, but it all fits into their policy. They want to make China more attractive, and you need a stable currency as the anchor for other securities markets from which to benefit from that.
Mark, thank you. And as you were speaking, that PBOC fix just crossing the Bloomberg there, 716.68, yet another strong fix from the central bank. We're also going down the open of trade in Shanghai, Shenzhen, and Hong Kong. Futures are pointing higher here this morning. This is the China Show. Here's your agenda for Greater China here today, and the big one is going to be Li Qiang speaking at the World Economic Forum in Tianjin, and also alongside that, we also have the AIIB meeting in Beijing, and our very own Has did speak with Jing Lichun there. Certainly we'll get that interview coming up. CSI 300, meanwhile, is doing quite well. We're at 1-month highs for that benchmark here right now, and Shanghai crude. We continue to watch, of course, the collapse in oil prices following the relief that we're seeing amidst the ceasefire in the Middle East, and a bond sale in Hong Kong this morning. Let's get to our top story now. Chinese Premier Li Qiang is due to address the opening plenary of the World Economic Forum meeting in Tianjin later on today. Let's get to our co-anchor, Sherry An. She is there and joins us live. Sherry, tell us a little more about what we're expecting today from the Premier's opening remarks.
Yeah, the Premier expected to speak in less than an hour here at the World Economic Forum in Tianjin. The theme for this year's summer Davos is entrepreneurship for a new era. Last year, Premier Li Qiang really decrying protectionism, saying that decoupling would drag the world into a destructive spiral. Well, nothing really has changed this year either. If anything, things are becoming worse. We're talking about U.S. tariffs on trading partners to resume just in about 2 weeks. Not to mention that the fragile trade truce between the U.S. and China achieved with the Geneva framework back in May and reaffirmed earlier this month is still pretty shaky. So we're expecting Premier Li Qiang to really talk about stability, emphasize that China is still open for business. Of course, this year what's different is perhaps the optimism over innovation here in China. DeepSeek, really a game changer earlier in January when it released that cheaper but powerful AI model. That's leading to more confidence among Chinese entrepreneurs that they can still lead in this era of uncertainty. Of course, we also heard from Zhu Ming, the former PBOC deputy governor, talking about potential AI breakthroughs, over 100 expected from China in the next 18 months. Perhaps not surprising, given that China holds more than half of the world's AI patents. In fact, Bloomberg Economics saying that the contribution of high tech to China's GDP has climbed to more than 15% in 2024 from only 11% in 2018. And put that into perspective, the property sector's contribution to China's GDP shrinking to 19% from a peak of more than 25% just a few years ago.
Yeah, and Sherry, you've got some great tech interviews as well coming up from the event. But that was our Asia Trade co-anchor there, Sherry An, joining us live from the World Economic Forum in Tianjin. And we will have more just ahead. In fact, we're going to be speaking with David Li. He's the founder and CEO of Hesai Technology. That is the world's largest maker of LiDAR sensors that are used in driver assistance systems, rather. We'll have that interview in about 20 minutes from now.
Meanwhile, a big story to tell you about, too, is China's sovereign wealth fund has canceled a planned sale of $1 billion in U.S. fund stakes tied to some of its biggest names in private equity. Let's cross over now to Min Lo, our China correspondent, on what prompted this movement, and which is happening pretty late into the sale process, right?
Yeah, and it's actually quite rare for such a reversal of the decision to come so late because there already would be buyers and managers already lined up. But we're hearing from sources now that China Investment Corp, the sovereign wealth fund, is indicating that it's no longer going to proceed with this private equity sale, a planned $1 billion sale. And I guess it could reflect that maybe Beijing's assessment of the risk there because of U.S.-China relations has lifted, perhaps because of the détente that both sides had reached in the UK, and they no longer feel that there is a big need to offload all their assets.
That was our China correspondent, Min Min Lo there, and we are counting down. We just had pre-markets coming online this morning. We're seeing a bit of upside so far in the session, but the Hang Seng pointing to gains of around 0.6% at the open. We've also got the yuan there, tracking that offshore yuan, of course, because we have seen it hitting levels not seen against, rather November, against the greenback, but we'll have plenty more ahead. This is Bloomberg. Well, we are 5 minutes away from the open so far for Chinese markets, rather Hong Kong this morning. Taking a look at what we're seeing in pre-market, it's looking relatively positive. You can see the tech index there looking like it's going to open higher. That's really tracking what we had on Wall Street overnight because the Nasdaq, for instance, hit a fresh record. First time we've seen that going back to February of this year, and really a couple of different dynamics in play. Firstly, you had Jay Powell appearing on Capitol Hill and sort of appearing to open the door for some earlier rate cuts this year. And then as well, you had this Middle East truce essentially appearing to take hold. Some of the analyst actions as well that we're taking a look at in particular, CATL is very much one of the main ones in focus today, but also Alibaba ADRs, for instance, cut to neutral. Actually, that's sort of like an e-commerce story, Alibaba and JD.com, Meituan as well. Again, maybe some concerns around the health of the Chinese consumer.
Yeah, it's interesting. We'll take a look at what that means for the stocks, Alibaba and JD. We're watching very closely what happens with CATL as well. Quite a few analysts in terms of their new price targets for the stock. I've got to talk about CATL there. This one coming through from Goldman. So they're initiating a buy. Price target of 343 Hong Kong dollars. So they're talking about improvement in gross profit. And it's really been driven by this whole rebalance in the domestic battery market and stronger overseas volume growth as well. So we're up about 2% for that stock in particular here today. And we're watching these gaming stocks as well in China. So authorities granting the largest batch of monthly approvals in 3 years, according to Citi. So that certainly should be a good sign for some of the gaming stocks here today. They are seeing the likes of Tencent slightly higher. The open is next. This is Bloomberg.
Welcome back. You're watching The China Show, and we're counting down to the open of markets this morning. We've got futures looking for a fairly muted open. Hang Seng perhaps could be a bit of an outperform in the session, but the main thing that traders are focusing on today, firstly, you've got the Middle East truce that appears to be taking hold. You've had Jay Powell as well speaking on Capitol Hill, really opening the door perhaps to some earlier rate cuts. But Yvonne, of course, you've been tracking what we've been hearing from other Fed officials. Yeah,
it's Chris Waller, it's Michelle Bowman, sort of kind of planting the idea that maybe this July cut could happen. You're starting to see the market reprice a little bit towards that, but mostly towards maybe September, where we saw more of that sort of movement when it comes to swaps and the like. So certainly, and maybe sooner than expected, Fed cut is the narrative here today. That certainly is lifting a lot of the equity space in some of these risk assets here this morning. And certainly the Treasury market is responding, right? And we talked about the options market. They're basically saying maybe we get to 4% for the U.S. 10-year yield, which Mark Cranfield told us not too far away, really, but really coming through from a peak that we saw of 4.6 back in May. Take a look at what the market open is doing. It's quite muted here so far. Of course, we're still waiting to hear from the premier of China speaking at the World Economic Forum in Tianjin and see what he has to say really on the outlook. You take a look when it comes to stocks are flat. Shenzhen's doing a little bit better, but watching very closely with Shanghai crude there. So another day of quite a dramatic drop when it comes to oil prices. So we're down some 8% for Shanghai crude. Iron ore continues to be in this sort of downturn as well. And watching CATL shares in particular, these are the A shares, but H shares just going to upgrade from Goldman as well, talking about how the gross profit margins are going to be improving here thanks to the rebalancing, thanks to that overseas expansion growth that they're seeing with the company. Take a look at what we're seeing in Hong Kong. There was also that talk about the consumption space, right, where we did hear from the PBOC talking about boosting consumption through credit. That's really going to be enough to kind of revitalize the consumption story? That certainly is a big question. But here you go. Hong Kong doing a lot better than onshore here markets right now. Hang Seng is up about 0.5%. HS Tech is doing quite well. We're up 1% here as well. We talked about those gaming approvals. So one of the largest batches of approvals we've seen for some time. So we're watching the likes of Tencent. We're watching the likes of NetEase, which did get that green light. Xiaomi also been talking about a little bit of the EV space as well. And watching Alibaba JD getting upgrades from analysts here as well. We're seeing that 1% upside for both of those stocks here this morning. Hong Kong dollar, 7.85. Key watch here, right? We're still on the very, very weak end of that band and getting very close and really touching it here at the moment. And we talk about the renminbi. Offshore renminbi now at the strongest that we've seen since November. The PBOC fix was actually steady today, although it did beat estimates. But this comes a day after the PBOC already set one of the strongest fixings since November, just a day earlier. So certainly we continue to see the PBOC leaning towards that strength. CATL, as we talked about, right, that's a stock to watch in the Hong Kong market, right? So 343 was the price target from Goldman. Right now, we're seeing a 1% or more to the upside here this morning. Bell.
Yeah, and actually, let's stay with another stock that's had quite a bit of upside, really, when you take a look at it over a one-year basis. We're talking about the Hong Kong-listed beverage maker Vitasoy. So it's up around 50%, again, over the past 12 months. This year, though, it's been sort of a bit of a different picture for the stock. So it's sort of trended a little bit lower and has been trailing the Hang Seng Index. But the company has just posted a doubling of full-year net profit. Joining us exclusively now is the Group CEO, Roberto Guidetti, joining us in studio today. So thanks very much for taking the time to come in. Let's talk about the earnings first and the results that you had. What was your key takeaway from the numbers?
So, yeah, the numbers overall, as you said, Bell, doubling the operating profit versus last year in the last fiscal year. Within that, now the group is around 6.3 billion Hong Kong dollars revenue, which is around 800 million US, and our operating margin is 6%, which is good for the category. Now, you know that the bulk of our group is in China. And by China, I mean mainland China and Hong Kong. 90% is over there, and we're operating now at 10% in China. China, there has been a lot of conversations now about market growth, macro economy, et cetera, et cetera. We have been growing in the second half of the fiscal year by 2%. Not our best growth, but growth. And the way we're looking at it, we use often the retail sales as a sort of indicator about how the macros are performing, right? And so we're looking at January to April, retail sales, total China 4.7%. May was a bit better, like 6.4. Put it together, 5. Now, beverages in the past tended to be a bit ahead of the average. Okay, now let's say that it's come a bit in line with the average. So a bit of a slowdown, a bit of a sort of contraction in different categories. We operate primarily in soy milk and in ready-to-drink tea. So soy milk affected a bit more together with dairy, a bit of a slowdown. So it becomes a market share gain play. While on tea, there is still growth, 5%, driven by no sugar, but also in the sweetened segment where we compete, there is growth. And our view has always been that if you have interesting things to offer at the right price, okay, to the shopper, and you understand media, how to navigate, there is, within the macro, there is still opportunity for growth.
The key is price. You mentioned and acknowledged in your earnings a significant shift in consumer behavior towards greater price sensitivity in China. How fierce is the competition now in the
So, Yvonne, 2024 was probably the year where we saw a bit of an adjustment on pricing downwards, okay? And so it is not across the board, but is particularly in certain segments, for example, in tea where we compete. The no-sugar segment has been driven primarily by lower pricing versus the average, so from the 6 to 5 RMB per pack to 4.
Wow.
All right. In addition to the consumer trend that is favorable to lighter, no-sugar beverages, this, I think, has probably made, it was a big factor in contributing. So now no-sugar tea is 25% of the tea segment in mainland China, 18% growth, while the sweeten is growing like 2%. Now, we are operating on no sugar in Hong Kong, where we have a position, but in mainland China, we are not. We are focused more on the sweeten, and we have a number of beverages there that enable us to grow the business. Yeah.
You also acknowledged just the intense competitive pressures, and for instance, there's Nongfu Spring that's entered the Hong Kong market, and they're announcing their own new beverage range. So how are you also grappling with what is a very intense market landscape as well?
Yeah, it's obviously this is a very strong company, and actually the level of professionalism, quality of product that now is available in mainland China is world class. And so when you're looking at these companies deciding to enter certain market, you have to take it seriously. Now, Hong Kong, our Hong Kong unit, I mentioned before, 36% of our group is in Hong Kong. So it's a business that is extremely developed, considering 7.5 million people living here. And the team needs to leverage basically the equity, the brand equities we have, which are multi-decade awareness, through generations. Pervasive execution. You cannot be in any place where you don't find one of our products in Hong Kong. But actually the pricing, or making sure that the innovation and the pricing now takes into account this new competitive set, is very critical. Because what has worked for these companies in mainland China obviously is going to be the main strategy for them to apply in this market in Hong Kong.
Do you think these price pressures in China are going to continue for some time, or do you see an end anywhere in the horizon?
I mean, eventually it will need to end, all right? At the moment, as I said, if we're looking at price per liter from January up to now, is stable. Now, within the average, you might have some differences, but basically price per liter on average is stable. And the reality, Yvonne, is not every company has a gross profit margin that allows them to actually continue this approach. Probably this company that Belle mentioned can do it. Okay. We are, together with them, the highest gross profit margin in the industry, right? So we still have some room, but I think it would be good if we all as an industry create a value creation industry as opposed to a value erosion industry. But I would say that there are a number of companies for whom it's not so easy to now continue to compete on price even further. So hopefully it will stay stable, and then eventually the good innovation might start again, to go back up. Not immediately though.
What could end it? The price war is one thing. There's been a lot of talk, I guess, of potential consolidation. I mean, there's chatter about Starbucks looking to sell its majority stake in China, in the China business, I should say, KKR and Daiyao and stuff. Do you foresee more consolidation in the beverage space?
Yes, I think it has become a very rich and diverse and multi-channel kind of, right? So we've been talking recently in our industry about the phenomenon of coffee chains and tea chains. When you're looking at some of the numbers that are provided by, let's say, a Euromonitor or a Nielsen, they might not necessarily include some of the growth that is happening in that particular channel. Now, tea chains, our latest estimation, if you make their sales, if we make the RTD, ready-to-drink sales 100, probably for tea chains, maybe 40% of that. So when you're then stepping back and say, is there decline, or is it that there is a shift of the shopper to some of these options that allow customization? Right? When you are in a tea chain shop, you can have a customized beverage, and interestingly, you're willing to pay a bit more. So there is a situation where if you have a good idea, if you have something that is interesting, the shopper remains curious. It remains open. So it's also the responsibility of the companies to come up with things that generate this curiosity.
Yeah, I guess still that sort of premiumization play in focus. But I wanted to ask as well, the markets, firstly in Singapore, but also Australia. I mean, Singapore kind of stood out for some slight weakness there. It was really the one by geography that you saw declining sales. And Australia as well, you recognise that you're going to be trying to decrease the losses. But what's your plan?
So I think the most important thing, Belle, is these are units of the group that historically and structurally has always been profitable. Okay, so it's not a situation of decades of... Now, in both cases, in our business, when you have some manufacturing disruptions, like it happened in these two markets. Then it takes some time to fix first and then recover on the commercial side, because these are developed markets, Singapore and Australia, where you actually align your plan with customers 6 months in advance. And if you cannot supply, it becomes complicated to sort of go back.
Yeah.
So I think that the goal for this year is certainly to have a very significant reduction of the loss, because we are very confident in the future we'll be able to return to the profitability. That is, the structural profitability of these two markets.
Yeah. Roberto, before you go, we got to ask you about what sort of new products that you guys are working on. I mean, you've been talking about the low sugar peach soy milk.
Yes.
Ya Shi Xiang, I mean, which basically translates as duck poop tea.
Duck poop tea.
I mean, they got to work on the marketing on that, right?
Can you explain duck poop tea as well?
So, yes. So, okay.
It's great. I love it, actually.
This is a tea variety, okay, that is coming from Chaozhou, which is this place between Fujian province and Shantou in Guangdong, right? Yeah. Now, you can say that maybe 10 years ago, everyone knew about this, right? But what happened is that, again, tea chains, starting in tea chains to actually create a bit of a word of mouth about this concept.
Yeah.
And I think it is, our product is taking these tea leaves, because we use real tea leaves in our products, plus a new kind of lemon compared to what we are using on our core SKU, low sugar, and 5 RMB pricing.
Yeah.
All right, so basically you reapply a bit of this kind of trend that is happening in the on-premise into the RTD.
Yeah.
And the product, we are very excited about it because it started very, very well. We started shipping it in soon after Chinese New Year, before the peak season starts. And great response, because it's also a very complementary experience to the original one. You can have a lemon tea, and now people are discovering it can be extremely different. So from that point of view, tea chain shaking up the RTD environment a bit and say, hey, maybe there are different ways to actually expand and stimulate the consumer. Did you try?
I love it.
All right, great.
And I love the original, so it's hard to
ask me about that one.
It's hard to, there's one downstairs in the pantry, Belle. We'll try some duck poop tea.
I'm just a bit wary of something that translates as duck poop, but okay.
All right, Roberto, it's great to have you back again.
Thank you very much.
Guidetti there, Group
CEO
at Vitasoy International Holdings there. Okay, it's a hard segue, but we got to take it because there's some headlines crossing through when it comes to the president. So what we're hearing from President Trump is that the nuclear sites in Iran are completely destroyed. So he is disputing, Belle, as we've been talking about, some of the reports from New York Times, CNN, on just how much damage was really done on those Iran sites the last few days.
Yeah, that's right. So CNN and New York Times, they say that they've got classified findings, and they're looking at essentially the amount of devastation that's been done to the nuclear program for Iran, and they're saying that it's only been set back by a matter of mere months. We also as well had the IAEA going on Fox News to say that, again, it was a sort of a substantial change. The program would have substantial ramifications, but they also couldn't say whether we're talking months or years. But it's certainly really a big question for us to answer, and really to get access to these sites as well and to that enriched uranium to be able to assess the level of the stockpiles.
And if that's the case, will Israel stay okay with this? Be on board with the ceasefire, right? If, in fact, the damage to the nuclear facilities was not as much as what perhaps the president is alluding to. Still a lot of questions there. Still a lot. We got plenty more ahead. This is Bloomberg. Let's head back to Tianjin now, where Stephen Ingles is there with our next guest. Steve, take it away.
Yeah, we're going to talk a little bit about autonomy here. Obviously, EVs and humanoid robots, they all have sensors to the max, including LiDAR. EVs in China, they have LiDAR, they have radar, they have vision cameras, they have GPS, all kinds of things. This is one of the biggest makers of the LiDAR sensors. Hesai is the CEO and co-founder, David Li. Thanks so much for joining us.
Thank you for having me, Steve.
What an industry to be in. Where are we right now in the eventual migration and evolution to level 4 autonomy? We're around level 3. And how is this, how are you seeing the business growing?
Thank you. First of all, our LiDARs are on level 2, level 3, level 4, on all the levels.
Yeah.
We're not limited to the autonomous driving. We're actually part of all the different levels of vehicles because of the function we provide.
Right.
If you think about LiDAR, it's a laser sensor that sweeps the street and really gives you the direct measurement of all the objects on the road, which is super critical because usually people try to compare that to cameras. Right? And camera's supposed to see everything, but every now and then it fails. Right? Like in the darkness or
well, this is the big debate, and again,
that's like the elephant in the room.
Elon Musk and Tesla talks all about vision and cameras, and he has said some. You've heard all the comments.
For sure.
It's expensive LiDAR, is expensive and unnecessary, freaking stupid. He says it's a crutch. I don't think LiDAR, you think, is a crutch because, like you said, it uses lasers. So in fog and rain and darkness and bright light, it cuts through that.
Sure.
So why is there this debate, whereas your LiDAR systems work in conjunction with vision and in conjunction with radar?
Exactly. That's exactly the point, right? First, the analogy I like to use is that it's a future of the invisible airbag because it actually stops the vehicle before it crashes. It's actually better than the airbag. Now, you mentioned two comments from Mr. Musk, right? One is expensive, which was fair. Back then, even us, we were selling at close to $50,000 per LiDAR, which is crazy and it's almost impossible to use on passenger vehicles. It's virtually impossible, right? But you need to look at how far we've got. Now we're looking at $200 and below. So I'm very proud to say we managed to reduce the cost of such an important safety sensor by more than 99.5%. I don't know how many people can say they've done that for their own industry, but we're very proud that we bring the cost down. So that's one thing that's being changed, right? The other, you also said, which is also interesting comment, is not necessary, right? Let's define necessary, right? For safety, everybody agrees that when you have 3D sensing capability, on top of the 2D sensing, it's actually safer. I think that everyone agrees. Of course, the debate is how much safer, is that worth the money? Well, we talk about money. How much safer? We used to not have the data because there was not enough LiDAR on the street, and the Tesla doesn't use LiDAR. The China EV gave the answer. One of the stats I can cite now is that the founder of Li Auto, on an interview, he said, now we found that in a lot of the fatal accidents, LiDAR can save up to 90%.
Right.
So it is a lot safer.
So you brought the cost down. What's that mean for scalability and production going forward? I understand you have an unnamed area in Southeast Asia where you'll have another factory. Can you give any details on the new factory and also what your production is going to look like? How much are you ramping up with that scalability and lower cost this year?
So two things, right? One is because we bring down the cost, we call that the democratization of such a sensor. Now, it's not for the rich people or the 1%. Everyone should have one. Today in China, the vehicles with our sensors, sometimes they retail to the 100,000 RMB level, which is really an affordable car. So we're really proud we're bringing it everywhere. That's for China. Now, with that capability, we're also happy to see the top global brands are looking into that and picking us.
Mercedes-Benz.
We announced a European OEM who is using us for their global program.
With the initials MB? BMW also, I think, is part of a program, AVM program.
There are many great brands, and we're very glad and grateful that we're having a strategic relationship with one of them already, and we're talking to quite a few others. Again, I won't be able to give you the specific names, but it's one of the most respected brand.
But that would be the first time a European major automaker would be using Hesai LiDAR.
That's very true.
So you can confirm that is true. You're just not naming who that is.
That's true. And also it's a game-changing event because for us, a lot of people think about sensors, it's always about making it cheaper. But now, when you see people are using us on the premium models or the global brands, they're actually buying the higher end model to do the level 3, and we're seeing that on the global scale.
Where are you building in Southeast Asia?
one of the countries.
One of those countries.
We will announce that.
How about an IPO in Hong Kong? I know you're listed in the U.S. What about Hong Kong?
That's also like one of the topics. I won't be able to give further information.
Funding is okay right now, though? Or do you want to take advantage? Look, CATL just had a blockbuster IPO in Hong Kong.
That's true.
Does that give you confidence that Hong Kong would be a good place?
I'm actually glad to see that many more tech companies, including a lot of the people in our industry, are coming to Hong Kong. So the capital market is actually seeing the growth of especially the AI and the physical AI. And one of our customers is BYD, right? A lot of people think BYD just make a lot of cars, but now you're seeing that they're using their platform AIIB. They're using LiDARs. It's very exciting to see BYD is also making a lot of effort in driving the intelligent driving of the industry.
David, great to see you. I want to spend more time with you talking about all these things.
Absolutely.
I love this technology and what's happening in China with the EVs. Definitely. I'm going to come to Shanghai and see your factories and your facilities. Thanks so much. Okay, guys, back to you.
Thanks, Steve. Yeah, great questions there on that secondary listing in Hong Kong. At least we know that David likes what's happening in the Hong Kong IPO market. But that was Stephen Engel, our Chief North Asia correspondent on the ground in Tianjin. And subscribers can watch us live and see our past interviews on our interactive TV function. That's TV Go. You can dive into any of the securities or Bloomberg functions that we talk about and become part of the conversation by sending us instant messages. Check it out at TV Go. We'll have plenty more ahead. This is Bloomberg.
Hong Kong is leading that charge here in terms of this equity rally in Asia this morning. We're up about 1%. HS Tech is really kind of driving that as well. The property index also doing quite well here today, but we're just moments away from that speech in Tianjin from the premier.
Yeah, something we're going to be tracking very closely, of course. We'll have that just ahead listening in, but you are watching the China Show. This is Bloomberg.
Welcome back to the China Show. Here's a look at a beautiful day in Hong Kong. It's hot and steamy, but then again, look, it looks like picturesque right now. It looks like a picturesque day when it comes to equity markets. Take a look at Hang Seng is doing. We're extending that three-day streak here, and we're up about close to 1%. And one of the bigger movers and bigger leaders across the board in the equity space here in the region here today. And we're just moments away from what's happening in Tianjin, and the Premier Li Qiang set to speak there.
Yeah, really going to be interesting what sort of tone he gives in that address, and we'll have Min going through the details in just a moment. But in the meantime as well, I think that talking about the Hang Seng in particular and the tech outperformance that we're seeing in the session today really speaks to that performance overnight as well, because we saw the Nasdaq, for instance, hitting a level we haven't seen going back to February of this year, or the first record since the early part of this year. But broadly in the session today, we've actually got equities that are tracking higher in the session. Some of the things that we're keeping a watch on in particular, well, there's oil, of course, because we've seen it snapping a two-day drop, and also as well tracking what's happening in the yield space, because we did see Treasury yields retreating overnight, and that was with Jay Powell speaking before the House on Capitol Hill, talking about the outlook for rate cuts. He's saying, yeah, maybe actually it could come a little bit sooner if inflation stays subdued.
Yeah, how long can he stay neutral was what Mark Cranfield mentioned. Now that you are seeing some of the doves really be a little bit more outspoken about where they think rate cuts should be. July, according to Waller and Michelle Bowman. So that's where the market is kind of tilting towards just slightly, and that's why we are seeing a bit of softening in the dollar once again. As you talked about, we're snapping out of those 2 days of losses for oil prices, but Shanghai crude still continues to be a down arrow story. And then it's still about that question, right? You mentioned about the tech and the bid that we're seeing across tech here in the region. Does the relief that we're seeing in the Middle East and the ceasefire underway mean that there is more of that rotation back out of the dollar, back out of oil, back out of energy stocks, and back into the growth stocks once again?
Yeah, and actually just on that topic of more of the growth picture, we're actually keeping a close watch on what's happening in the EV space this morning. This is more of a reaction to government policy because we have seen government plans to launch subsidies in counties and towns to try and boost sales from July to December of this year. So there is some modest upside. I mean, BYD looks like really the biggest gainer so far in the session.
Yep, and we're watching this one big mover. The leader on the board really is New Oriental. So this is, of course, the education firm, JP Morgan, coming out and lifting the stock from neutral to overweight. So we're seeing a 7% pop there. They're citing, look, buy after the slump, right? So we've already seen the slump, and the prospect is increased shareholder returns. So they're thinking about a more defined sort of buyback and dividend policy coming through after finishing that buyback program in May. So there you go. There with New Oriental this morning.
Yeah, and as you said, really what's going to be the top story of this hour, at least, very closely tracked, is what we get from Chinese Premier Li Qiang. He's attending the opening plenary. He's about to deliver a speech at the Summer Davos in Tianjin, and I think actually we've got a feed of the stage, so we know that he could be about to address the audience. But our China correspondent, Min Min Lo, is joining us now for a preview. So, Min Min, what exactly were we expecting to hear today?
Yeah, Premier Li Qiang, 1 year ago at this time, he was in Dalian for the Summer Davos as well. And he talked about the risk of decoupling and how that would derail the global economy. And 1 year later, that theme still rings true because a lot of things have changed, but some things haven't. We have a new president, we have new wars breaking out, but when it comes to the trade picture, perhaps it's even worse than before because of the universal tariffs that President Trump has been trying to impose and the global trade rebalancing there. So Premier Li Qiang likely to home in once again on the benefits of this, what they're calling win-win cooperation, abandoning the zero-sum mentality there. So that's the external sort of global trade picture. He's likely also to spend some time reassuring the global public on the trajectory of the Chinese economy and the health of it, just to reassure the public that it's been resilient, that the government is doing what it can to address some of the weaknesses, including boosting domestic demand. We got the news today about, the EV subsidies, stopping the decline in the property sector, and also pumping in money into R&D to drive high-tech innovation. And that is one of the areas where there has been a lot of optimism with, the former deputy governor of the PBOC yesterday saying that there could be over 100 DeepSeek-related software that could be coming out within the next 18 months. And then, of course, there is geopolitics as well. We have the Middle East conflict that's been dominating headlines. So maybe Premier Li Qiang might also talk a little bit about that, calling for cool heads to prevail and to use dialogue as a way to resolve these conflicts.
You mentioned about tariffs. We have to get back to that discussion because I think we just reached the halfway mark of when that truce ends, right, for China and the U.S. What are we expected to hear? How China is prepared, maybe, in terms of tariffs?
Yeah, I mean, of course, both sides will be wanting, at least the Chinese side will be wanting to de-escalate. Already we're seeing a bit of these moves that are taking place. So recently, for example, China had listed 2 additional fentanyl-related ingredients under its restricted substance list. So some effort from China to try to do more to meet some of the U.S. demands there. But I think at some level, China understands that some of these external risks are beyond their control. So a lot of the focus is also on focusing on the domestic economy, continuing to de-risk, especially when it comes to reliance on U.S. technology. And I think, the key thing that China really wants, when it comes to rebalancing trade, is that it wants to buy the things that it wants to buy. So basically the chips, the high-tech exports, and that is where China is also pumping a lot of money to try to drive its own innovation on those fronts.
So what sort of tone do you think we could get then on that push for self-reliancy?
Yeah, I mean, China has already, talked a lot about high-quality development and putting money into, all of these sectors to boost R&D. And right now there has been a lot of the tech competition that is showing up, especially in the AI front. And China has been very public about some of its milestones, right? It's holding all these humanoid sort of robot marathons. And I guess the tone here, it'll be interesting to watch how harsh I guess Li Qiang would be when he mentions the U.S., especially when it comes to recent moves in geopolitics as well. China has strongly criticized the U.S. when it comes to meddling in the Middle Eastern war and how it's setting a very bad example for the rest of the world by using force to resolve a conflict instead of using dialogue or other means. So whether he kind of soften his tone by, using veiled references to the United States, or whether he takes a very strong stance to criticize the U.S., I think that gives us a sense of the atmosphere that China is setting up for negotiations in the coming months.
All right, Min Min, thank you for setting up preview for us. Min Min Lo, our China correspondent. We got plenty more ahead. This is Bloomberg. Taking you back to live pictures out of Tianjin right now at the World Economic Forum, the summer Davos as they call it, and we're expected to hear from the Chinese Premier Li Qiang and making that open and plenary, of course, at this meeting. And the theme that we've been talking about, Belle, is entrepreneurship for a new era. Last year, he talked a lot about decrying protectionism and the like. This seems to be more of shining a more positive light, and really coming at a time when you're starting to see the importance of the private sector being recognized, but a lot of authorities out there, and really maybe the need, given that a time when the economy is still sort of, I guess you could say, not really coming robust in some ways, that they're needing the private sector to come back to support.
Yeah, there's
the
certainly
economy.
points of weakness in the property sector. There's points of weakness on the consumption side as well. But I think what's really interesting, and to your point around technological innovation, is really how the private sector has come to the fore this year in China. You had the DeepSeek moment to start the year.
Yeah.
You had that very public embrace as well by President Xi Jinping, but also some of the comments that have been coming out of WEF, for instance. We heard from Zhu Min, for instance, who was previously deputy governor at the PBOC, and he's saying, you know what, there could be 100 or more than 100 deep seeks still yet to be discovered in China.
And we spoke with Goldman Sachs' Sifu just last week about her report about the comeback of POEs, right? The continuing AI and technological breakthroughs that you're seeing in China has basically rewritten the narrative and really brightened the prospects of POEs here right now. So certainly that is still the key sort of theme, it seems like, today. All right, we'll see what happens there, but looks like Li Qiang has not yet come on stage. But we've been talking a little bit more about what else is going on, right? Not just what's happening in WEF, but also at the AIIB Forum, too.
Yeah, that's right. We've also got coverage of the Asian Infrastructure Investment Bank annual meeting that's happening in Beijing. And now our anchor, Haslinda Amin, is actually moderating a panel there right now. Let's listen in.
Okay, looks like we're not fitting in, but it'd be interesting, right? Because Has did speak with the AIIB President Li Qiang, talking about free trade. It still remains the strongest defense against rising tariffs. In that exclusive interview in Beijing, here's more from Jin.
I invited the United States and Japan to join, and I had extensive discussions with them. Quite a lot of people were my old friends, right? We understood each other. So I respect the decision-making of any sovereign government, but I assure them, for whatever reason you choose not to join, it's not a problem. We can work together. For instance, as you know, we work with the U.S. and the Japanese financial institutions, and we are open to the professionals from U.S. and Japan. They are working very happily in our institution, and some of them are taking very important positions. Financial institutions and business companies are welcome to compete in the international competitive bidding. So we are inclusive.
Your member countries are now grappling with the issue of tariffs. Are you seeing heightened lending this year, for instance, from member nations needing more funds as a result?
Tariff issue, certainly, I hope it will be eased, if not completely worked out. Tariff issues will certainly impact on some of our member countries, right? But also, I find this is going to lead to a different kind of scenario of global development. If the tariff is an issue, the best way to deal with the high tariff issue is for a group of economies to be working together, maintaining free trade. So in terms of the geography, population, resource endowments, I think ASEAN and the GCC and Central Asia, these countries can work together without any problem. And on the other hand, the European countries as a bloc is also interested in working with Asian countries. So I think there could be a solution to deal with the tariff. And if that is the scenario we've been looking at for kind of solution, probably tariff issues would be gone later on.
Mr. Jin, back in October, you talked about how it will take time for stimulus to play out, and we're seeing that. Retail sales is rising. We're seeing even consumer stocks doing really well. Is it sustainable, or is this a sugar rush for the country?
You're referring to China?
To China.
Yeah, I think the government has issued a series of new policies stimulating the economy, and not just one shot in the arm, but also all these policies will be doing, I think, its job in promoting the private sector development, creating more jobs. And you will find most of the innovations, creative new things were developed by the private sector. You see how vibrant this is. And the government provides the enabling environment for all of this business in the economy to do what it should do.
That was the AIIB President, speaking at their annual meeting in Beijing with Bloomberg's Haslinda Amin, an exclusive interview as well. But coming up on Bloomberg Insight later this morning, we'll have more coverage from that annual meeting in Beijing. Haslinda Amin will be sitting down for an exclusive interview with the ASEAN Plus 3 Macroeconomic Research Office to unpack what exactly is hindering Asia's trade integration. We'll have plenty more ahead. This is Bloomberg.
Take you back to Tianjin now at the World Economic Forum. And yes, the Premier Li Qiang is speaking right now. Let's take a listen.
Back in 2008, when the annual meeting first came to this city, the world economy was grappling with the serious impact of the global financial crisis. People felt disoriented and anxious, not knowing whether the world economy could emerge from the difficult situation and where it was heading. I would say that history often rhymes to many's surprise. Today, the world economy and international economic and trade cooperation are confronted with new difficulties and challenges. As President Xi Jinping noted, global development is now at a critical crossroads. I think it is exactly at times like this that we must think deeply about how the global economy and trade will evolve. What kind of economic and trade order our world needs, and how we should strengthen cooperation and tackle challenges to promote common development and prosperity. Here, I wish to take this opportunity to share with you a few thoughts of mine. 3 thoughts. My first point is that the current international economic and trade landscape is undergoing profound changes due to factors including geopolitics, technological advancement, and economic structure. The global economic and trade landscape is going through deep transformations and adjustments, or happening at a staggering speed and scale. This requires us to look beyond the complex and intricate dynamics and grasp the underlying trends and characteristics of these changes. As I see it, we need to pay particular attention to the following. First, the economic and trade system is becoming more diverse, and the Global South is rapidly gaining strength. While trade is weakening in developed economies, which represents the overall trend, Global South countries, which account for about 70% of the global population, are emerging as a vibrant market. There are a few numbers that I would like to share with you. Since 2000, trade in goods of developing countries has grown by 4.6 times in the past over 20 years. much faster than that of developed economies, and its share of global trade has increased from 30% in 2000 to 45%. In a context of rapid upward growth. As such, developing countries have increasingly become the main growth drivers of global growth. Second, trade is slowing down in traditional sectors, but growing in emerging sectors. The road to trade recovery has not been smooth over the past years, and international trade structure is also going through adjustments. I look at data from last year. In 2024, global trade in goods grew by a mere 2%, while trade in services expanded by 8.8% and contributed to 60% of total increase in global trade. In addition, the various technologies are advancing rapidly, which has pushed the frontiers of trade, leading to robust growth in digital trade and green trade. By 2024, the global exports of digital services had doubled in the past 10 years. Third observation is global mechanisms are facing challenges and regional collaboration is growing. We have seen substantial increase in protectionist measures and growing economic and trade frictions across the world. Data shows that in 2024, there were over 1,200 discriminatory trade barriers globally. And if you go back 5 years, before the pandemic, the number stood at around 200, but now it's 6 times higher. Many countries are forced to explore new ways to trade, resulting in the continuous increase of bilateral and multilateral economic and trade arrangements. The number of regional trade agreements signed among countries has grown from less than 100 at the beginning of this century to over 600 today. With so many bilateral and multilateral and regional arrangements and agreements, in terms of global trade growth, what are the pros and cons? Are they good things or not? That demands our deep consideration, and we will see in the future. Fourth, cross-border investment is fluctuating and declining, and the risk of fragmentation in industrial and supply chains is on the rise. The growing number of restrictive policies on foreign investment worldwide, compounded by trade tensions, has prompted multinational corporations to be more prudent in investment decision-making. Global cross-border investment has seen negative growth for the 3 consecutive years, down by around 40% in 2024 from the historical peak. Some countries and regions have interfered with market activities in the name of de-risking, forcing adjustments in the international division of labor. The trends of friendshoring, nearshoring, and onshoring in industrial and supply chains are strengthening, leading to more redundant construction and reduced efficiency of the economy. From these shifts, we can see that in the evolution of the international economic and trade landscape, there are both destructive factors that keep creating shocks and impacts, but we should also see that there are some positive forces that seek to counter the risks of instability and uncertainty by building consensus and strengthening connectivity. A deeper examination reveals that division and disruption often originate from short-sighted calculations, whereas positive and proactive actions are driven by long-term considerations. We will not and shall not return to closed-off and isolated islands. What we need are more bridges of win-win cooperation. That's the first point I wish to share here. My second point is, as the landscape shifts in international economic and trade cooperation, constructive actions are needed more than ever. I believe changes and transformation are often accompanied by restructuring and reshaping. The world economy of tomorrow will not be a simple repetition of stories of the past. That said, no one can alter the overriding trend of history or the law of the objective world. Economic globalization will not be reversed. It will only carve out a new path, forge ahead amid twists and turns, and achieve an upward spiral. Whether we realize it or not, whether on our own initiative or not, when we engage in international economic and trade activities, we are actually reshaping their rules and order. In this process, we should keep to the right path and follow the overall trend, demonstrate wisdom and a sense of responsibility, and adopt a positive attitude and take constructive actions. Adopting a positive attitude means we should always keep to the right direction when growing the global economy and international trade, and firmly embrace a universally beneficial and inclusive economic globalization. Taking constructive actions means we should take more practical steps proactively to safeguard free trade and multilateralism and ensure the stable growth of the world economy. Specifically, I think that mainly includes the following three aspects. First, we should resolve differences and disagreements through equal consultation. It is normal for countries to have differences and disagreements in their economic and trade relations. Our trade is so big, whether it's in multilateral trade or bilateral trade frameworks, there are all kinds of problems, and these are all normal. As long as they engage in dialogue and consultation in the spirit of mutual respect, I think solutions can always be found. We Chinese people have a long tradition and culture, and when we do business, we often say that harmony makes good business. We have economic and trade exchanges with almost all countries and regions of the world. I think that is to say, you are in me, I am in you. We treat all our partners as equals, regardless of any differences in size, system, or culture. And we work with them to manage disagreements and expand consensus through dialogue and consultation in line with WTO principles. This year, China and 32 other countries jointly established the International Organization for Mediation in China's Hong Kong, which is a new initiative that seeks to use the wisdom of the East in resolving international disputes. China is ready to make persistent efforts with all countries to build maximum consensus and cement the foundation of the trust that underpins international economic and trade cooperation. Second, we should safeguard our common interests in mutually beneficial cooperation. The global economy is deeply integrated. No country can sustain its prosperity in isolation from the world. Hence, cooperation is a must if we want to achieve development. And to safeguard the common interests of all, at the end of the day, is to safeguard the interests of our own. In the face of global challenges, we should uphold the principle of extensive consultation and joint contribution for shared benefit, enhance macro policy coordination, safeguard stable and unimpeded global industrial and supply chains, and boost the security and resilience of countries' development through closer cooperation. China will continue to actively participate in G20, BRICS, and other multilateral cooperation, advance high-quality Belt and Road cooperation, and increase input in areas such as global connectivity and sustainable development to better promote common prosperity of all. The third thing that we should do is to contribute to each other's development by generating more growth. You know, currently the momentum of global growth is weakening, and many sectors are mired in the fight for existing resources. I'm afraid this is an important cause of the many problems we are seeing today. People are fighting for existing resources rather than expanding or adding more resources. To address this problem, should we choose a zero-sum approach and expand our own interests at the expense of others, or should we opt for win-win cooperation and make the pie bigger through openness and sharing? The answer is self-evident. When international economy and trade is facing headwinds, what we need to do is not resorting to the law of the jungle where the strong prey on the weak, but enabling each other's success through win-win cooperation. China has achieved great successes by committing itself to opening up, and going forward, China will open its door still wider to the world. We will further integrate and connect with the global market, step up industrial collaboration with other countries, and actively share the fruits of our own development to deliver greater benefits to the world. That's the second point. And my third point is that the Chinese economy, with its further development, will continue to contribute to the world economy. Over the past years, the Chinese economy has remained an important engine of the world economy, contributing around 30% of global growth. The reason lies not just in China's stability and high growth, but also in its openness and in its linkage with the world economy. In other words, the Chinese economy has embraced the global market and integrated into the world economy. It is also driving global growth and promoting world development. In addition to that, China is willing to do all it can to help overcome the difficulties and challenges the world economy faces. First, the sustained and steady growth of the Chinese economy will provide strong underpinning for faster recovery of the world economy. Over the past years, no matter how the external environment evolves, the Chinese economy has always maintained a positive development momentum. This year, against notably stronger shocks from outside,
all right.
Noticed that several well-known international
dealing
agencies
with some technical
have
issues here. All right, there we go. Let's keep listening into the premiere
of China. we are confident and capable of maintaining relatively rapid growth. A closer look would show that China's economic development is not a short-term expansion, but a steady progression toward long-term goals. China has clear development goals, consistent planning and guidance, resolute reform measures, and pragmatic macro policies. In the past 70-plus years, we have implemented 14 five-year plans. This year is the last year of the 14th five-year plan, and we are now formulating the 15th five-year plan this year. Our blueprints, once drawn, will be seen through to the end. This enables the Chinese economy to navigate through cycles and develop in a sound and steady manner, and continue to provide more stability and certainty for the world economy. Second, the continuous expansion and upgrade of the Chinese market will create more room for global economy and trade to grow and regain momentum. China is already the world's second-largest consumer market and importer, with nearly 50 trillion yuan of consumption, over 50 trillion yuan of investment, and over 20 trillion yuan of imports, or in RMB yuan, of course. Not to mention huge growth potential across the board. We are on track to become a high-income country in an all-round way, supported by robust demand for consumption upgrade, both in traditional areas such as clothing, food, housing, and transport, and in emerging areas such as smart terminal and cultural IP, which are growing very fast in recent years. We are intensifying our efforts to implement the strategy of expanding domestic demand by launching special initiatives to boost consumption. This will make China a mega-sized consumption powerhouse on top of being a manufacturing powerhouse, and provide more market space for enterprises around the world. Third, China's continuous breakthroughs and leap in innovation will provide much-needed driving force for global development. China's economy has been fueled by a constant pursuit of innovation and progress. For years, China has taken science and technology as its primary productive force and blazed a successful path whereby sci-tech innovation spearheads industrial innovation and industrial upgrade propels sci-tech evolution. In China today, high-speed railways traverse numerous mountains and rivers. Electric vehicles are serving millions of households, and artificial intelligence is empowering thousands of industries. In areas such as green energy and advanced manufacturing, Chinese technology now leads the world. And most notably, China's innovation is open and open source. We are willing to share indigenous technologies and innovation scenarios with the world and support international collaboration in research, development, application, and popularization in order to advance innovation-driven development in all countries through openness and cooperation. Ladies and gentlemen, friends, in the development of global economy and trade, entrepreneurs shoulder an important mission and play a critical role. The theme of this annual meeting, Entrepreneurship for a New Era, is highly relevant. I always believe that in human society, entrepreneurs are a group of people with exceptional talent who assume the important role of organizer of production and operation and the driver of social progress in various countries. In particular, in the vast market economy, entrepreneurs with their extraordinary insight, creativity, and ability to execute can organize various resource elements and transform them into real productivity, turn the uncertainty of changes in the market into the certainty of market success, and dare to blaze new trails for economic and social development. Together, they represent a unique and powerful force. Such entrepreneurs and such entrepreneurship are particularly invaluable as today's world economy grapples with all the changes and urgently needs a way out and forward. And they deserve to be respected, cherished, and supported. The new era requires entrepreneurs to play bigger roles, assume greater responsibilities, and add more new dimensions to entrepreneurship. I encourage you to do more things for the greater good. I hope you will always follow the laws of the market, do what is right, champion openness and cooperation, uphold economic globalization, oppose decoupling and severing of supply chains, and call on all sides not to turn trade into a political or security issue. I encourage you to do more things to break new grounds. I hope you will seize the opportunities of the new round of sci-tech revolution and industrial transformation, break free from temporary difficulties or obstacles, consolidate innovation resources in a broader scope with a long-term perspective, and unlock new promising areas in economic growth. I encourage you to do more things for win-win results. I wish you will embrace each other's development with an open and inclusive mind, share resources, draw on each other's strengths, promote market integration and mutual empowerment, and achieve common growth. The Chinese government will, as always, encourage and support entrepreneurs in their undertakings and endeavors, and continue to foster a market-oriented, world-class business environment governed by a sound legal framework. With arms wide open, we warmly welcome enterprises from around the world to invest in China, deepen your roots in China, develop alongside China, and work with us for a better future. To conclude, I wish this annual meeting a full success. Thank you.
That was the Chinese Premier Li Qiang there speaking at the World Economic Forum that's underway in Tianjin today. I think really the key elements that came out of that, or one of the key elements, is really Beijing continuing to project that image of stability. And we have seen that since President Trump came back into office on January 20, that China is pledging to be a firm, a steady leader on the global stage.
Yeah, certainly he mentioned pretty early on in the speech about the road to a trade recovery is not smooth in the past years as well. And, you know, the economic and trade system is becoming more diverse. But as you mentioned, right, there's also this push for innovation, for tech. I think when you mentioned the line about encouraging and supporting entrepreneurs, sharing globally original technologies, I think that's quite interesting too, what we heard from that.
Yeah, and you're really getting to this point now that the AI race is not just about sort of competition around specific AI tools, but it's about competition of who is going to have control of the standards and the governance and the broader infrastructure as well. And so you see this very direct push from the US, but you also hear that there from China, saying that they want to be able to share their innovation on a global stage as well. But let's get more on this now. Bringing our China correspondent Min Min Lo joining us. So Min Min, what stood out to you?
Yeah, I think, as you said, one of the points that stood out is how China is really reassuring the global public about the resilience of the Chinese economy. He says that China's growth is going to continue to underpin global growth regardless of whatever happens in the external environment. As China has proven before, they were always able to bring positive growth despite the shocks we have seen in the previous years. And in contrast to the United States, while he hasn't named U.S. Specifically, but when it comes to, some of the dividends that China has gained when it comes to its investments in high-tech R&D. He talked about sharing the fruits of these developments with the rest of the world, keeping things open source, sharing original technologies with the rest of the world. The second thing that stood out to me was he mentioned the importance of engaging with all countries on an equal basis. And again, he didn't refer to the U.S. specifically, but this was something that China had repeatedly mentioned in terms of how they want to engage with the U.S. when it comes to trade negotiations, doing it on an equal basis. He talked about all the challenges, right? The decoupling that we are seeing, the fragmentation that we're seeing, erosion of these global multilateral institutions that are being replaced by a rise in regional and bilateral trade agreements. And he talked about the importance of, continuing to work towards this win-win cooperation. And he highlighted in particular the opportunities in the global south. And again, this highlights China's strategy. If you look at China's trade, especially after the tariffs had kicked in, China's exports to the UK, for example, has surged by a lot. China's exports to the rest of the world has also increased. In fact, the main decline in exports was only to the United States. It shows that the demand for Chinese goods, while the US is reducing its demand on Chinese goods, all that demand is just shifting elsewhere. It's not disappearing. It also shows you the resilience of these Chinese exporters. That's one of the things that really struck me when I speak to Chinese exporters, is how resilient they are because of the intense competition in China. They are forced to be so nimble, and they have gotten through the first trade war, they've gotten through the pandemic, and they are now trying to get through the second trade war by shifting very quickly, offering discounts, finding new markets overseas, and that's what China is saying it's able to do.
We certainly have seen that. He also mentioned about China seeking to become this major consumption powerhouse, which, we've been long waiting for this sort of shift in the economy to more consumption-based. But that certainly has not really taken that much gotten too much traction just yet. But what is he talking specifically about the consumption story?
Yeah, he did mention that China is going to come up with new special initiatives. He didn't go into details, but he promised that it's a hint that there is more to come in terms of government stimulus. And he said that, yes, China is not just going to be a major manufacturing powerhouse, it's going to be a major consumption powerhouse. And again, highlighting the offer of this giant single market, $1.4 billion, and what it can do for enterprises overseas, and talking about how China would warmly welcome them to take root in China, to make use of that deep market and the consumption power that could be unleashed if China does successfully get people to start spending the money that they have been saving in their pockets. It's not that they don't have money, it's that the confidence is not there and people are holding back their spending.
Yep. All right, Min Min, thank you so much for summing that all up for us there, the premier speech. Min Min Lo there, our China correspondent. Just checking markets, though. We initially were seeing a bit of decent gains here when it comes to before this speech. It looks like we're coming off some of it now. In fact, the onshore markets are pretty much flat. Hang Seng, we're coming off that. We're just about 150 points to the upside for the Hang Seng here this morning. Tech, though, still coming off as well there. But certainly there's a lot of positivity when it came to what Li mentioned about the private sector, the tech sector, and really this whole use of supporting entrepreneurs as well. Certainly does help when it comes to the whole tech space as well.
Yeah, and just drawing your attention to some lines that have dropped or come across the terminal in the last few minutes. Andrew Cuomo has conceded in the New York City Mayor Democratic Party race. He's actually conceded to his upstart rival, Zohran Mamdani, in the Democratic primary. This was the race, of course, to become the next mayor of New York City. So he's addressed his supporters, saying that tonight was not their night, but he did want to applaud, essentially, the people that have worked on his campaign for running one that was really smart, really good, very impactful. But again, not enough, of course, to convince voters, as he has conceded again to his upstart rival, who really has just risen out of relative obscurity in recent weeks. But we'll leave you there with that. This is one of the most trending stories in the terminal the last few minutes. Plenty more ahead. This is Bloomberg.
Quite an interesting speech from the Premier of China, Li Qiang, there at the World Economic Forum, and really just highlighting, I guess, the external threats that, of course, the economy is dealing with. But it seemed to be, as you mentioned, right, projecting this sort of notion of stability, that they are still willing to engage in business with the global south, certainly is a vibrant market they talk about, and a supply chain that looks increasingly at risk, but more diverse, as he mentioned.
Yeah, he's talking about that sort of risk of fragmentation, further fragmentation from here, but he's also making that point that China's economy is very resilient. And I think one of the interesting points that you touched on earlier was around consumption. And we have heard this before, of course, from China numerous times, but still that continued vow to really restart that engine of domestic consumption in the Chinese economy, make that really a key pillar. But I mean, innovation, of course, stood out as well.
Yep, innovation, the need, he mentioned to really step up the support when it comes to entrepreneurs and really when it comes to the sharing of original technologies, right? They're willing to share that globally in the face, of course, this trade war. And there's a lot of talk about, export curbs and the like. This is the narrative, I guess, Li Qiang is trying to project, that they are open for business. But also talk about the growth side of things, confident and capable of maintaining relatively rapid growth for China and to step up its industrial cooperation with other countries. So they're still quite optimistic about the growth picture, despite a lot of what's going on externally.
Yeah, and actually you see that sort of being reflected a little bit in market trading today. It's a little bit slightly more risk on. I mean, we did see, of course, this trade truce in the Middle East taking hold. We saw the Nasdaq as well reaching the first record going back to February of this year, translating into some Asian equities today. More ahead.